morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, Friday in a bear market. Here we go. We have for August 1st, 2008, the S&P. You know, everybody's focused on, like yesterday for Thursday, the GDP numbers. Well, tomorrow, unemployment is the big one, and everybody's focusing on unemployment figures. They are due out at 8:30 OST, Omni Standard Time, same as Eastern Time. At 8:30, markets will go like this. Woo, 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 woo. They'll go all over the place. Bonds especially, most likely S&Ps. And I would think it's going to be downside, especially on a Friday in a bear market. Now, yesterday for Thursday, we did a video and told you traders that we were looking for some upside, barring GDP coming out and scaring everybody. Luckily, us Omniacs got in around the 1280 area, went up to 1289. We all got out right before the GDP report. And when that report came out, it dropped $10 in a snap. So luckily, Omniacs, we got very lucky yesterday. We got lucky calling for a bull move. We got the bull move. We got out. And then towards the late afternoon, we sold it and caught the afternoon drop. So, hey, we did an okay job. Traders talk about a two-sided market. These markets are nuts. You know, I showed you a bunch of charts yesterday, and I showed you a bunch of charts that are moving either away from above or away from below the Omni's proprietary moving average. This weekend, I should do a video. I most likely will do a weekend webinar, and I will show you where those markets are now. One of those markets that were just getting above that Omni proprietary average is the bond market. The USU8 or the ZBU8, depending upon your trading platform. We are going to look for a green Omni in bonds tomorrow because the likelihood is if unemployment figures are as ugly as we expect, they're going to hammer the S&P and you're going to get a flight to quality purchase in bonds. If you don't know what a flight to quality is, it's a phenomenon that takes place when the world gets nervous that the U.S. stock market's going to get hammered on the downside in a big way. They rush in and buy U.S. 30-year bonds and 10-year notes. And I think that will happen tomorrow. The charts are setting up for a rally. We just got above the Omni proprietary average and rallied straight through it. And I think with the indicators I'm about to show you on the charts, I think you'll see why we're looking for buying bonds tomorrow. With no further ado, traders, let's go look at the bond chart. Okay, traders, you are looking at the bond chart, the ZBU8 daily bond bar chart. Now, I mentioned a bunch of charts to you in the last video, and those charts, I showed you this average, the Omni's proprietary moving average. And I mentioned how many charts were getting just above it or getting just below it. And when that happens, when many markets converge around our proprietary average and then run away from it, the ones that run on the downside usually have a big down run, and the ones that run on the upside have a decent up run from it. Well, bonds got above the proprietary average and took off all the way up to here. Then they settled close to the average and opened up a bit higher Thursday night for Friday's trading, and I think I'm going to go with the upside here on bonds because technical indicators are pointing towards that very move happening. I'd like to show you a couple of those indicators, but you can see the construction of this chart, traders. It looks like it could have a nice little run up here somewhere, maybe test the old highs. Not the old highs back here, but maybe something up here in the mid 116, high 116 area. So let's see what we get at that. Now let me show you some technical indicators that we wrap around the bond chart and see what you think of those. Okay, traders, again, you are looking at the daily bond chart, but now we are looking at some technical indicators. And of course, at the Omni Trading Academy, we look at many, many indicators. But here are two that are very widely known that the industry does follow. And quite clearly, you can see that the Commodity Channel Index, or the CCI, is quite bullish with this look right here. It gets overbought when it's somewhere up here. We're nowhere near that yet. So you have the averages running higher until they get up here. It looks like bonds, at least using CCI, are in buy mode. Then, of course, we have our stochastic oscillator, and the slow stochastics are easily pointing up. You can see that with ease. You know, the eye can just see there's a little curve down here, and it's pointing up like it did here and gave us a big rally, like it usually does when it gets down to this oversold area right about here. You can see all the times the market bounces from that, and generally the bond market itself runs up when stochastics and other indicators are running up with it. So here you are, stochastic indicators clearly turning towards the upside. The commodity channel index clearly pointing towards the upside. If you, as a technical analyst, pull your indicators, you will find just about every indicator that you want to look for is pointing towards the upside. So I'd say that it's a decent bet, unless somehow the employment figures come out tomorrow and surprise us and everybody in the country's back to work. I would think you'll get a flight to quality. Let's see what we're going to get, traders. Do your own homework on that and tell me what you find. So, you've seen the charts. Traders, that's pretty clear, right? Those indicators are easily pointing up. The bond chart looks good. We certainly got above the Omni's proprietary. And no joke about the people in the United States back to work. Between all the car companies, all the real estate companies, all the banking, the whole banking industry, all the layoffs that we have seen in the past 6 to 9 months, there is no way this unemployment figure comes out tomorrow and shows everybody's back to work. Unless, of course, you know something that I don't. But looking at the charts, watching the figures that come out month after month, I couldn't possibly imagine this unemployment report coming out favorable towards the economy. So let's go with that. Traders, you know I don't use fundamentals to trade. They always come out in the charts. The indicators in the bond chart look bullish for tomorrow. Let's see what we get. So for tomorrow, August 1st, 2008, the 30-year bonds, the ZBU8, Omni says to buy in the low 115 area. That would be below the teens. We're currently trading at 115.23, so you got to do your homework and get your orders in. Traders, when we talk about a two-sided market, I kid you not, you're going to need a fat stop for tomorrow. Keep your stops out of the danger zone. When that employment report comes out, bonds are going to go down, up, or up, down, but you're going to get big volatility before the move takes place. So make sure you put your stops in first, and make sure you do not put them too close, because I kid you not, there's going to be lots of volatility here tomorrow. So buy them in the low 115 area. Omni's profit objective is the mid to high 116s. I'll give you an exact objective as the market data accumulates, but you can expect some kind of run into the 116s if we get the flight to quality and they hit the S&P tomorrow, but that is a very likely event. So let's see what we get at that. Traders, don't forget these markets are really treacherous. You can lose your shirt. You can lose so much money trading commodities if you are not careful, if you don't place your stops, and if you trade seat of the pants, you can really get yourself hurt. So do your homework, come up with a trading plan, and then trade that plan tomorrow. The time to do your homework is at night when markets are slow and things are quiet and the phone's not ringing and the kids aren't running around. What you need to do is make sure you do your homework at night. Everything's mellow. Come up with your trading plan and then act that plan out the next day. If you think when the market's open and it's ticking like crazy and the news is flying and Paulson's on TV, if you think that's the time to make decisions, you are not looking at this correctly. Those will be emotional decisions, and many times these markets eat up those emotional decisions. You traders out there, you know what I'm talking about. When that market opens and you go, oh no, the figures are coming out, let me get long, oh no, I should have went short. Those are emotional decisions, and the market seems to eat that stuff up. So keep your emotions out of trading. Come up with your trading plan the night before, and don't let anybody's nonsense deter you from that plan. Once you have the plan, act it out every day, every night, do it over and over, and I assure you that you will start to have a much smoother curve in your trading, and hopefully the bottom line of your account will start to go up. So take this advice, traders. I kid you not, there are tons of Omniacs at my site, and I tell them all the time, stop going crazy during the day. Stop trying to make decisions during the day. It is not the time you're supposed to figure out what's going on. So keep that in mind, traders. It is a very good piece of advice. All right, so traders, we got right in tune with the markets yesterday. I think we're going to be in tune with them again tomorrow. We will probably trade S&P on Friday, but you know what? We'll let the market data come out first, and then we'll see what we need to do. So you Omniacs, make sure you're at the site. For you traders that don't know where the site is, it's www.livewithoscar.com. Come on down to the site. Grab a free membership, come into the chat rooms, traders, and join the ever-growing army of Omniacs that help one another every day get through these rough and tumble markets. There's a lot that we have to offer at the site. There's many lessons going on. I'm on camera, live webcam with audio every day, directing these rooms and directing the trades. We do lots of analysis together. I lend out my desktop so you can see what's on my computer screen as I'm teaching you where these markets should go based on the analysis that we've studied. And it's really helpful for you technicians out there and for you new traders and you professionals alike. So make sure you come on down to the site. Traders, for you traders out there that don't know, I am a broker. I would be more than happy to be your personal coach and mentor. You can open up an account right at my site online, and then I can be there to help you get the orders in, help you get them out, and be there when you need somebody on your side to help you get through these markets. So if you need a broker, here I am, traders. I'd be more than happy to help you. All right, I think I'm going to make this short and sweet. Give me a buzz anytime you want, 702-629-4755. Again, traders, never trade alone. I tell you this in every video. There is no need for you to sit by yourself in front of your computer and try to figure out the massive amount of information coming in and how you should react to it. It's so much easier when you have a crowd of people all scanning news together, all helping one another. So make sure you come on down to the site. Stop trading alone and come trade with us. All right, traders, I think that's about it. Email. Send me your emails if you don't mind. It's oscar@futuresanalysts.com. All right, traders, keep your emotions out of trading. Make sure you're at the site tomorrow so you can see what we're going to do and how we're going to handle these markets. And the best way to keep your emotions out of trading is to say this every day. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.